All right, welcome to the Safe Wheel live stream where I share my account P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. And the system is currently up 21% year to date. Okay, so first, type in the chat any questions you might have. Uh, Post any questions that you might have, and I want you to do that early rather than later so I don't end the broadcast before I can get to your questions. And I'm going to assume that you can hear me. Let me know that you can hear me if you can type in the chat there that you can. All right, so first I'm going to start with the earnings edge of one of the 3 accounts. The earnings edge is where we take more risk and we're looking to just make like crazy amounts, like 10% a month. I mean, we're taking a lot of risk to do this. Sounds good. Okay, thank you. So we're going to take the risk with this earnings edge account. And currently, um, last week, we traded MU right here, MU. You can see that my total year-to-date P&L is $40 because we traded MU earlier this year and we came out ahead. And on this particular trade, we did not have a winner. So we took a loss on MU last week. So currently our record where the earnings edge is 21 wins, 7 losses, and 3 ties. And I think you all know that I changed the system a little bit and I used 8 strict filters. And ever since then, that was about 8 weeks ago, I have 6 wins and 2 losses using those strict filters. And you can see the account value started with $5,000. So we're down about 7.8%. So this one so far, taking a lot of risk, trying to mine that edge, uh, hasn't quite worked out yet. Okay, but I do recommend this if you want to take some risk. You have a small account, and this is for me. Uh, this is what I would do with a small account that I was trying to, double, trying to really take a lot of risk and trying to make it work out. Um, you can see here that P&L is close to $1,000, but there's a lot of commissions, which takes down the account. So we have been making money, but the commissions have been taking us down on this particular trade system. Okay, let's go to the second system that I'm going to talk about today, which is the Premier Level 5. How are we doing with that? So with the Premier Level 5, we started this account on April 8th with $30,000. And my record is 8 wins, 2 losses, and 2 ties. And I currently have 2 open trades right now. And this account's taken a drawdown of close to around 4%. And right now we're up close to 4% since April 8th. If you want to look at the S&P 500 since April 8th of this year, it's down 24.5%. So you can see that we're vastly outperforming the S&P 500, and that is our goal, to outperform the S&P 500. Okay, so there we go with the Premier Level 5. Now let's get into the safe wheel. Okay, that's probably why most of you are here. And that is, I believe that's this account here. Yes. So you can see our account value started with $5,000 up to 61.05. Now we're trading Uber. I should say I'm trading Uber. And you can see that I got assigned at $31 last week. I took this assignment. So Uber, where's Uber here? Oh, it's up pretty good today. But I think when we put this trade on, Uber was trading around $32. So, and now it's around $28. So you can see that Uber went down significantly. We did have our put hedge on. So you can see that the put hedge is up $238. And then our assigned positions down 216. So these kind of, this put hedge is designed to hedge, and it's doing a really good job. Okay. You can see that these are fairly equal in terms of the drawdowns. Now I'm going to look at the flow chart to tell me what to do. So I put on a trade last week, and the stock can do 3 things. It can go up, it can go sideways, or it can go down. Obviously it went down, right? And I got assigned, and I own these 100 shares. So the further it goes down, the more I can lose with these 100 shares, but the more I gain with the put hedge. So it says here, can I sell a covered call above the strike price or the price that I got in, this $31? So that's the question. And I'm always working in the nearest expiration cycle. Let me go to Uber. Except for my put hedge, of course, that's further out in time, but I'm always dealing in the nearest expiration cycle. So $31, I can't, so I want to try to get at least 31 cents or $31 here at the 31 strike, or I like to do a little bit out of the money, so maybe $31 out of the money. But you can see I can't get any premium. So that's what happens with the wheel strategy. You get to a point where you have so many positions on, you might have room for 5 positions or 10 or however you want to work it. And what eventually happens with the wheel strategy is that you end up getting assigned, and then you're kind of holding the bag, right? You're holding the position, and you can't sell any covered calls against it, and you're just sitting there doing nothing, and you're not collecting any premium. And that's why I like the safe wheel, because we have a hedge that's hedging us when that happens. So, but in this situation, we can't continue the wheel. There's not enough premium. Okay. So the next question here in my flowchart is the overall position profitable? Because if it is not, I would add a second wheel strategy. I would sell another put. Or if it is if the position is profitable overall, I'll close everything out because I made a little bit of a profit or a lot of a profit, and I'll start over. So let's see. Uber. See, Uber is up $27 year to date, and this is the first time I've been in Uber. There's no previous cycles or anything. So I'm going to close everything out, and I'm going to start over, and I'm going to use Uber again. Even though this is a little bit here, I mean, it's if you want to get subjective, you could just put a second tier on here because this isn't really a lot of profit. But I'm going to go by the rules, and I'm going to close everything and start over. But I'm going to start over with Uber. So let me thinking about that. Let me think about my put hedge. See, my put hedge. So right now, Uber is at $28, and I want to buy a put at about 80% of that. So 28.18 times 80% is a 22.50 put. Okay, just want to make sure I wasn't holding. I got a $25 put, so that's not the correct put to hold if I were to get out and start over. Okay, so what I'm going to do is I'm going to close everything out. Create closing order. Try to get as much as I can. I'm just trading it. And I'll put a closing order in for this one. It is 292. We got a little more. Okay, none of these are filling. Okay. Excuse me, I have allergies. Okay, let's get this one closed. And of course, it's going against me a little bit. Let's see if I can get this out of here. 2812, 2809, so I'm chasing. 2810, 2808. Well, maybe I won't make a profit. Let's see. It's going to be close, but I've already made my decision. So, okay. So now we have zero. We have nothing on. We're going to use Uber as our stock. So what's the first thing we do? We put on a put hedge. So what do we do with our put hedge? We go with about 150 days out or longer. This is 171 is the closest. And remember, we wanted to get 80% of the price. 28. It's about this 22.50. So we're going to buy 3 of these. We're going to buy 3 puts. Mid is 203. We want to pay as little as possible. It looks like we got it for 202. So now we have our put hedge on. So we want to start the wheel strategy now that we're hedged. Okay, so let's go with we're going to go with the nearest expiration cycle, the one that expires on Friday. We're going to go to the puts, and currently we want to be out of the money, so under 28. So 27.50 would be good. You can go with 27. As long as this is higher than 27 cents, this is a lot higher. This is barely higher. I'm going to go with the 27.50. I'm going to sell this. Now I have between $5,000 and $10,000, so I'm going to use one contract and 3 hedges. If I had 10,000, I would use 6 hedges and 2 contracts, and then you just kind of go from there. $20,000, you would do what? 12 contracts and 4. So, but we're still within the $5,000 to $10,000 range, so we're trading one contract. So I'm going to go with this one. I'm going to sell one. Mid's 49. Maybe try to get 50. Okay. The algorithms are good. They know when you're trying to sell, when you're trying to place an order. Okay, 48. Let's see if we can get 48. Okay, now we have the beginning of our wheel strategy. There's one other thing though. We're going to hedge this. This is a hedge. But if the stock rises rapidly, this hedge is going to lose more money than the amount we would gain from selling this put. So we're going to hedge the hedge. We're going to put on a long call for super cheap. $5 or $6. There's one here, the 31 call. This is the hedge for the hedge. I'll pay $6. I won't pay $7. Okay. Okay, so there we have our new position on our put hedge here, and now we have our regular normal wheel in the nearest expiration cycle. Okay, so now I'm going to get into, well, first of all, let me just say that I have there's 2 things that I have available, which is the 6 filters that you use and how to pick the right stock for the safe wheel. I have that available. And I also have the flow chart available that tells you exactly what to do and when with this system, because we haven't encountered every single scenario live. So you want to be able to, know exactly what those are. So if you want that, I'll put a link in the description below. And I've kept the price really low on that, by the way. I'm thinking about raising it, but it's pretty low right now. Okay, so also I want to remind everyone, do me a favor. I would like it helps a lot when you click the like and the subscribe button, because it gets this out to more people, and it helps more people and actually make money trading options, rather than others that don't share their P&L. And so if you don't see their P&L, you really have to think about, are they really profitable? I say they're not. And if they were, they would share their P&L. But this really helps if you hit the like and subscribe button. It helps people. It helps to get it out to people that really want to learn the proper way, what I believe is the proper way to trade options. Okay. So let me get into, let's see if there's any questions here. We have the WID3 here. If you're assigned the stock, would you only sell the stock if you can't get enough premium from selling the call? No. So if you can't get enough premium, there's 2 scenarios. One is if the overall position is profitable, then you would sell the stock. That's what I just did. Or if the overall position is not profitable, Then you would add a second wheel or a second put. You would sell another put. You would continue. You would add to the position. Okay, so, and that would be the most that we would add to the position. Just one more. So there would be at most there would be two uh, or 200 shares in this example, with three put hedges protecting them. So the answer to your question is um, no. That's not the only scenario um, where you would sell the stock. There's a lot of scenarios where you would sell the stock. Sometimes you take a loss, sometimes you take a gain. You know, most of the time you take a gain, sometimes you take a loss. So there's a lot of scenarios where you'd sell the stock, and that's where the flow chart comes in and tells you exactly what to do when. All right, sounds good. Yeah, I got good sound today. Good, thanks. Shovel, let's do this. What's up, Shovel? Kevin, how you doing? Good morning. And Will, I kind of think I want to leave my put hedge instead of buying it again and save some commissions and fees. Absolutely. I thought about that too. And I might do that. But I do have very strict rules and I want to just follow those rules. And because of that, I decided to not do that. But if you do it, I mean, it's totally fine. I mean, you're probably going to want to put on another layer today. That would be the best thing. But what's good is when you put on that second layer, you're deep into that put hedge. You're deep into that hedge. So that hedge is really protecting you well. Okay. TechFacts Global. How do you repair an underwater trade when it goes against you? Using this system, well, there's a couple scenarios. There's many scenarios that can occur, and it's kind of deals with the flow chart and exactly what to do when. Now, if you're talking about a different type of a trade, I'd have to know way more specifics on that. But there are scenarios where in this system, you can't sell any more premium and you're at a loss and you get out anyways. We don't want to be in a situation where we're just stuck not selling any premium. A lot of people that trade the wheel, they're literally stuck not selling premium or they're getting margin called. I'm not gonna be in a situation. I made this system to where there is no situation to where we're not selling premium. If we're not selling premium, we're moving out of the position. Okay. So if you want to get more details about what you mean by repairing an underwater trade, um, you can put this in, just go ahead and ask me here. Will, at the same time, I'm risking more anyway. Um, I don't know, you add a second tier, but you're deep into that put hedge, you don't have a lot of risk. Jerry, please describe the situations where the drawdowns can occur, and if possibly, there's a way for us to mitigate the drawdown, even though this isn't part of your strategy. Um, it depends on what position you have. You mean in the wheel? If drawdowns occur while you're in the wheel, you're stuck. I mean, that's the problem with the wheel. That's why the wheel is not a profitable system. The wheel by itself, it doesn't work because you get stuck in positions and there's no way to repair that because you try to sell a call that's way too far out of the money, and then you want to sell a call that's closer to the money, and then you get assigned and then you lose money on that. So you just, with the wheel by itself, without a hedge, um, you're not going to be able to really mitigate that drawdown unless you take risk, right? You can take risk by selling a closer to the money call, and you're taking risk that you might get called away from that position at a loss. So when you say the situations where drawdowns occur, uh, you need to be a little more specific about that. Like, are you talking about the wheel? Okay. Jerry, is it possible to avoid 10% drawdowns with this strategy? No, I mean, it's I'm not going to say you're not going to see a 10% drawdown with this strategy. You might see a 10% drawdown with this strategy. That can happen. Um, it's very rare, and I don't remember the numbers off the top of my head, but 10% is like pretty heavy. Like that's probably the largest drawdown you're going to see with this system. Don't quote me on that. I'd have to look over the numbers, but that's really a heavy drawdown with this system. What did I do? I traded. Was it FCX? No, APA, and lost $256. So this was kind of worst case scenario. I mean, right out of the gate, this sucker just went right up. It went up, and it just stopped right there at my hedge, my long call. It just stopped right there. So it's like worst case scenario, and I lost 250 bucks out of a $5,000 account. So what is that? 5%. So we saw a 5% drawdown right here. I don't really see drawdowns really too much beyond that. That's pretty heavy, pretty worst case scenario right there, 5%. But then, it could happen twice in a row. So there's your 10%, right? But it's pretty rare. Probabilities are extremely low that that'll happen based on my back test and my forward test. So you guys have seen me trade this thing live since the beginning of the year. And this has been the largest drawdown right here, 5%. It wasn't even 5% because I had $6,000 in the account, but it was less than 5% was the largest drawdown so far this year from peak to trough. And we never got under $5,000. We came right out of the gate, and we're making money. And we're up over 20% year to date, with the market down around 25, or maybe more. So it's a great system, and I give it away for free. Okay, any other questions? I don't see any more questions today. I'm here on Mondays. Today's Tuesday. Yesterday I was traveling. So come back on Monday. This is normally done on Monday mornings at 7:15 a.m. Okay, I'm going to leave a couple minutes here to see if there's any other questions. All right, I'm going to get ready to end the broadcast here. So remember, if the P&L is not real, what else are they trying to conceal? See you guys on Monday next week.